you mentioned there's some really good examples of, pre-writing 80% of a credit paper. So that actually these really experienced individuals that we have as part of the business are actually focusing on solutions, ways to progress it. What's the next step? Right, this is where we are. How do we get it to the next step? How do we get it to completion? I think that's the power of the tech that's come in, really. And I think the ability to have done that ourselves rather than buy an off-the-shelf package, I think means that it's really bespoke to our process, to what we want to give our clients. I think that's vital, and that adds to, I'm sure, the continued tweaks we'll make to it as we progress, as we launch it in the coming weeks to the actual customer broker market, and they can actually start using it and feeling the benefits of it. I think, again, that feedback loop's really, really important there.
Welcome to the Property Funder podcast. I'm your host, Michael Dean. You can find me on the internet at property_funder. I'm here today with Adam Butler, Director of Sales and Marketing at Avamore Capital, and recently appointed board member as well. Adam, how are you doing?
Yeah, thanks for having me on again. I must have done too bad a job the first time, so good to be back.
Well, we you had to share a bit of limelight with Ed the Cat Blundell, so we wanted to give you a little bit of an opportunity to say a little bit more about your work today and showcase all the stuff that you're doing. So,
well, there's been a lot of changes, a lot of improvements since the last one was on as well. So hopefully, plenty to talk about.
Yeah, absolutely. Last year was a big year for you. What would you say was the sort of the standout experience or milestone in your own personal mind?
Personally, I think obviously getting on board at Avamore. I've been there 5.5 years. Starting as a relationship manager and kind of working my way up. I think that was a hugely proud moment for myself. But I think there was a lot of improvements as a business as well, to be honest with you, which actually I think, having worked here for as long as I have now, I actually take a lot of pride in those as well, to be honest with you. I think a lot of the improvements, changes we made to the process, my team, I think actually we can see that hockey stick effect already implementing. So I think, personally, the board, but actually I think the improvements we made as a business, really, really good to see. Yeah.
And in terms of sort of sales performance, what do you think were in the process, what do you think were the big changes that made were making or starting to make the difference, in your opinion?
Yeah, I think obviously we've been working on the tech side of the business now for a little over 12 months. I think actually seeing that really add benefit to the process, the pipeline, I think making us a lot more efficient as a business. I think that first kind of, version 1 of the platform, the tech side of things, I think actually helped us massively internally. I don't think our clients, our brokers have seen the benefits too much yet. So that's 2026 to come. But I think actually it enabled us to be far more efficient, right from, initial inquiry right the way through to actually redemption on some of these deals now. I think that's been a key. Yes, we've grown each department, but not as much actually when you compare it to 90% increase in volumes in H2 compared to 2024. So I think when you actually look at the number of the amount of business we've done versus the team size growth, I think that tech side has been massive for us, to be fair. And also, I guess, when you're tweaking processes, platforms, I think we've tried a couple of things. I think the key bit is we're looking at what's the outcome for our client. And actually, I think combining that with our own operational efficiency has been the key, really.
I mean, you talk about efficiency, but how crucial has been the increase in predictability of our processes and client experiences to growing to that growth in sales pipeline and completion numbers? Yeah,
I think something Avamore's always done a little bit different to probably sort of market norm is actually taking those deals to credit review up front. I think that's something we've always done with positives and negatives effects of that. I think what we've done this year is, in the last 12 months, has been really, really strict at that point in terms of the information needed to review. The outcome of that for brokers and our clients actually is a certainty if we issue terms at that stage. I think last H2 of 2025, I think we were nearing 80% conversion from that stage. And that's before you've had a vow, a QS report, any legal due diligence done. And to be converting at that sort of level just shows the work we're going in. And I think that's why you come to a lender like Avamore, really, is actually that, certainty of funding, I think is a word we always try and strive for. Almost impossible, unfortunately, to do 100%, but actually if we can get it as close to that as possible, I think that's really what drives that confidence in Avamore with our customers and our borrowers in what is still quite a volatile market. So actually, again, that's where coming back to the tech giving us that confidence when we're reviewing these schemes and adding to our own experience, our own knowledge across the credit committee, the underwriting team, even the sales team. I think we're fairly knowledgeable in terms of schemes, viability of those as well. So I think that confidence up front to our customers in terms of what we can do and backing that, really. It's not a dangle of a carrot, pull the rug out 6 weeks later sort of thing. I think actually when you compare our initial credit review with our kind of final credit review, the numbers stack up.
Do you think that the brokers that we work with and the clients that we work with have a greater sense of our appetite and what we're good at and what we do?
Yes and no. I think we've improved that. I think the growth of my team, I mean, we've doubled the sales team in the last couple of months, to be fair, with 2 new joiners start of the year, a further new joiner last week. I'd like to think we'll add more to that team later in the year as well, but I think that's just given us more coverage. And I always say, I don't care how good a salesperson you are, how good you think your pitch is, you have to do it multiple times. And the ability for us to be out there seeing people more regularly and being more proactive with communicating what Avamore does well, what is a good Avamore deal, what do we like, what do we not like, you have to be back in there multiple times. You can't just go in and expect one discussion, they know exactly what we like, what we don't like, I'll just sit back and wait for the deals. You've got to be back in. So I think the growth of the sales team's been really key to that. As I say, I think we've started that process. More work to be done this year in getting out and seeing people more regularly, because if we're not sat there, then there's 20, 30 other lenders at least that are going to be sat in that seat. So
what, obviously with new joiners to the sales team, I mean, if you look back at the, in the early autumn, you effectively only had 2 external RMs, and both of whom were still less than a year into the job. You've now essentially seen a tripling of that sales team. So you've got a lot of new faces, some with more experience than others, some coming from the broker side. You're obviously having to do a lot of on the job training whilst also trying to get the leads in. What are the key bits of advice you're giving to the relationship managers, and I suppose to relationship managers that are watching this now in other firms? What are the key qualities and key skills and attributes that you're trying to get across to them to make them most effective?
Yeah, I think I'd first start by saying that I think we've got a really, really diverse team now. You mentioned there's a number of different backgrounds, which I think actually adds to the team. Having, 6 salespeople, all identical, actually I don't think really adds value to it. What advice am I giving to them? I think those that haven't come from a direct lending background, and actually even if it's been lending in a different sector, maybe bridging, maybe term loans, knowing what you're selling is the key bit. So actually for those that joined at the start of the year, actually the first 5-6 weeks have been spent in the office almost every day, working with the credit committee, working with the underwriting team to really understand that. I think that's what our clients, that's what our brokers want. They want people coming out, and when they talk about what Avamore can and can't do, they're talking with confidence. It's more than just, here's my rate card, these are the pricing, this is the leverage, here's a criteria guide, kind of semi-underwrite your deals. They want to know that the person that's going to be speaking to them about their inquiry, dealing with it initially up front, knows what they can and can't do. And that's even more so in the development space. It's not tick box lending. So actually you need to understand, we know you can have 2 or 3 deals that look almost identical on the face of it, but actually they could be very different once you get into the details. So I think having a team that is more than just sales, gift of the gab, actually that knowledge, the experience behind them, I think is really key. So building their confidence and you always sell something better when you know it, right? Yeah. So I think that's really key.
Well, I think for me, it comes back to, I've said this a million times to you privately, but we don't sell financial services, we sell trust.
I think you can see with the Georges, right? They started in an internal capacity, they learned that, they did that for 18 months, and now they're out on the road. Their brokers know that they've sat in that room, they've presented deals to credit before, they know what gets through, what doesn't, at what leverage, and all those things. So I think that the proof is in the pudding with those that have now been on the road for 12 months with that previous experience, and then kind of trying to follow the same format really with those that have joined. I think that's the key. But also I think the trade-off for salespeople is you want to do deals straight away. And actually I think it's really important. Sometimes the no's you say, actually the first deal you go out, you go and see a broker for the first time, the first deal they talk to you about, it may not, it's unlikely that's going to be perfect fit for you. And actually I think that's the one of the most important things you can do is actually, if the deal's not right for you, then either having a conversation and being firm with, look, that may not be, there's a better home for it elsewhere on that, or finding a solution to it. It may not be that it's a right fit in the current format, but I think Avamore and certainly the sales team have always tried to provide solutions. So as it's currently structured, we can't do it. However, if they tried X, Y, and Z, that may be as simple as doing a JV with the landowner to create that equity in the scheme. There's so many other options, but I think that's what we're trying to drive in the sales team. Is it's not no, move on, go elsewhere. It's actually no in its current format, but if they did X, Y, and Z, because as I say, what we do is we live in that grayscale. There's always solutions, and they may not take you up on your solution straight away, but the number of deals we actually see come back around with that solution, I think, is key. The other side of things as well is regular contact on every deal. I think, again, the team size now means that we can be a lot more proactive because, again, Avamore, I think the reason Avamore has been so successful is not simply pricing leverage. There's so much more to us and what we do and what we can offer. Just sending terms out and leaving them out in the ether is not going to provide success. We need to be speaking to the brokers and following up with those solutions, with those tailor-made products, I guess, tailor-made schemes. That's again the key.
Yeah, and in terms of appetite for this year, like what are the obviously we've got our standard product suite that we promote, but what are you encouraging your sales team to promote and talk about in terms of our appetite and where we see deals having the best chance of success?
Yeah, I think very much in the same format as last year, really. I think probably 75% of our business was across that ground up development and then that wide arching refurb product, which covers anything from your sort of simple conversions, refurbishments, right the way through to your commercial to resi conversions. I think that's going to remain our core. We've always been well known for the part complete product, albeit I think that still will struggle a little bit as it did last year. Just some of the schemes we're now seeing, they're just a little too far gone, shall we say. So I think, again, focusing on definitely that refurb conversion product, I think definitely at the heavier end is where we are very, very competitive at the moment and still hold a real niche, I think, in terms of how that product works and what it can offer compared to our competitors. And the smaller, 1 to 9 unit ground up developments, I think that's what we're well known for, our flexibility on experience. Again, I think the experience is a really good point to prove that we're not a tick box lender, that, someone who's been doing it 20, 30 years as a contractor, no, don't tick the box as previous schemes, but actually our ability to understand how they can work and progress. And I think more importantly to the wider development market, those smaller infill schemes are going to be really important for us to try and help the government achieve the 300,000 target or probably more aspiration than target for the year.
Well, I guess there's another strand to that, which is that those small infill sites, they're typically done by what I'd call operator developers rather than investor developers, and so they're less discretionary in terms of how they operate. They have to just, their job, rain or shine, is to keep building, right? So
absolutely,
I think that gives them, that gives us a degree of insulation from some of the macro components of the industry. Whereas I think if we were doing, say, bigger ground up schemes in urban locations, I think that would be a lot trickier. And you certainly see a lot of the development lenders that do larger schemes. They're struggling to put money out the door in a credit effective way. So yeah, I think that positioning makes a lot of sense for us. What's the sort of just for our audience, I suppose, what's the smallest ground up or development loan or refurb loan that we'd consider?
We timed that quite well, actually, because we about 10 days ago completed a ground up development, was 280 gross. Good client, done several schemes before, and actually a broker we've worked with for probably since inception, to be fair, a really good relationship of ours. So probably a little bit outside of necessarily the criteria parameters.
Yeah.
But again, I think that shows our commerciality, that the deal made sense. It was pretty straightforward. Again, a good customer, and I come back to that commercial mindset that you don't know necessarily what that deal might lead to.
Yeah.
Second deal, third deal for the client or for the broker. So I think our commerciality is good. A standard anything really that starts with a 2 we're happy with, right the way up to.
I think we actually did something even smaller than that recently, didn't we?
We did.
It wasn't a development deal, but
we did a bridge as well. I think it was 170 gross, albeit it started a little bit higher. And clients ended up selling one of the properties that was going to be on the loan. But again, coming back to the commercial mindset that I think we've really found again for Avamore is that, well, we're on it now.
Yeah.
Clients paid for the report. To go back and just say it now falls below minimum loan size, that's too corporate a decision for me. That's not how Avamore's based, to be honest with you. And actually, that is a good example that I think the subsequent deal we did with that broker actually was about £2 million.
Yeah.
So again, I think that if there's one thing I think over the last 12 months on top of operational improvements and efficiencies is our commercial mindset. Yeah. It's back at as good as I've ever seen it in the nearly 6 years I've been here now, to be honest with you.
Just speaking about those changes, I mean, how have you seen the evolution of our appetite changed from when you started to now? Because I mean, I know objectively it's broadened massively, but like maybe you can kind of articulate it in your own words. Yeah,
I think that we've had probably a couple of opportunities where we've wanted to grow and expand. Market was maybe not there for it. I think sometimes a lot of stars align. Obviously, we had Greg and Jacob join as the new MDs last year. I think that gave us and them the opportunity to reassess our process, and I think that's really improved. But I think appetite, as I say, appetite and market kind of come hand in hand, really, to be honest with you. Because actually, I often think our appetite and our commercial mindset is actually very similar to where it was when I joined. I think we've got back to, we're on a deal. There's a deal there to be had. Let's find a solution one way or another. I think sometimes when you have, this number of inquiries, again, if I look at January alone, I think we had over half a £1 billion worth of new inquiries come through in January alone. You can sometimes fall into the trap of, well, things have changed now. It's not quite the deal it was initially. Yeah. There'll be more down the track. Let's move on. And actually, I think once you're on it, there's a deal to be had. Let's find a solution. I think that's the one thing. If I could summarise our appetite and passion to do deals, I think that's the key thing, to be honest. And I guess for me and my team, having that mindset, having that process in the office, gives me the confidence that I can be out on the road with my team. I can be sat here and on a Monday morning and chatting about this, knowing that the guys have got that in the office.
Yeah, I mean, I think one of the benefits of how we're funded means that we're not in a position where we're subject to funding line limits. We've never been faced with a situation where either of our two main funders have turned around to us and gone, yeah, no, thank you. Would you mind slowing down the flow for 5 minutes, please? And I think that means that we've got a hunger, but also at the same time we know that market. Macro dynamics can change, and we've had so much flux over the last. I mean, you've been with the business for 6 years, joined us in the middle of COVID, but you think about all the things that have happened since then, not just COVID. You have to also approach things like there is no tomorrow. And one of the things that frustrates me sometimes is how clients sort of dilly-dally when it comes to getting deals done. And the deal that was on the table yesterday, it might not be there for you tomorrow. So we need to just don't rest on your laurels. Just if deal's there to do, just get it done and let's move on.
It's the only way we're going to achieve success in 26, 27 as we're planning for, really, is that every single deal has got to matter, to be honest with you.
Yeah. And I suppose we talk about changing appetite. So I suppose in my mind, what I was thinking about was the shift in geography, and I think we've probably benefited from that now. Whereas, historically, Avamore was very much seen as a sort of southeast or south of the Watford Gap type of lender. Around the time you joined, that appetite expanded. The ticket sizes, we often wouldn't get out of bed for less than £500,000 or £750,000 in certain cases. We're now doing £250,000 deals. Do you think that that's something that's also making a difference now as well for your sales team in terms of how they can sort of their proposition and how they can connect with more brokers?
100%, to be honest with you. I think we used to joke when I first joined as a relationship manager, the small deal specialist. I've never been worried or conscious about the deal size. I just want to complete the deal.
Yeah.
What that leads to as the next deal, you just don't know. And I think that certainly as a broker relationship, if you start, there's a lot of brokers out there that their bread and butter is that sort of 200, 250,000. Why would you expect that broker to trust you for the first time with what they will see as their big deal, their most important deal, if you haven't already proved yourself maybe on the bread and butter? So I think it's opened a lot of doors. I think the regional side of things, I remember a credit committee or two early doors where there was maybe a little bit of green on the map, and it was like, not too sure that's for us. I think we've done more schemes in the Midlands and North in the last probably 18 months, 2 years than we ever have done. I think we've done 4 schemes in Hull, South Shields, and I mentioned some of these places because they're maybe not the pretty sort of popular Manchester city centre, Birmingham city centre locations, but the schemes make sense. So I think our growth, I think that's helped with, having George Paul covering the area now, that sort of visibility in the area. But when I get up there, far more regularly than I used to, actually, I think the brand is better than it ever has been up there because we're lending up there. We're in that area. I think that's really important to know. I think when I joined, I was the relationship manager probably covering that area, and I live in Surrey, so probably not best place to do it, to be fair. So again, I think that it takes time, brand awareness in these certainly more regional areas of the country, because there will be some lenders who've been based there, been lending there for years. But I think again, our willingness to lend nationwide is as good as it's ever been.
Well, I think also in particular with a lot of our exits now not being on the sales side, but being more on the refinance side. I mean, I think all time, I think it's over 60% of all of our exits have been through refinances, and particularly if you're doing flatted schemes, north of the Watford Gap, you've got that debt yield, haven't you? That means that the ICR tests on a refi are always going to work, and in many ways, I think. Yeah, if we weren't lending in ways that wouldn't work south, in the south or the southeast. So I think in many ways it's made a big difference to us that we are operating further north. And I guess, I can only say from my own part that I think we're very much committed to lending further north. Maybe not Scotland, of course, but
not yet.
But not yet. But certainly lending, more in the north of England. Do you think that we when we look at adding some more bodies to the sales team as the year progresses, that there'll be a bit more emphasis on giving George some support in the north?
100%. I think it's just geographically, it's a very large area, to be fair. Obviously, the density of clients, brokers in there is a little bit lower than you would be in London, but definitely an area of continued growth. I think we've talked in years gone by of having a more sort of permanent base up there, whether that's the sort of way we go or not, I'm not sure at this stage, but definitely more boots on the ground. I think, to be honest with you, it's probably an opportunity to add 2, maybe 3 more to the team later in the year if we continue on the growth that we saw last year and our aspirations going into the new financial year come April, then definitely that would be an area.
Do you think one of the challenges with being successful in the north is also that you, particularly in the northwest, you've got to kind of compete with that sort of Manchester mafia, and I guess not having as deep roots in the area, it just takes a bit more time than maybe where we're in our sort of our traditional southern heartlands, as it were. Yeah,
I would agree. I think time is the key factor there, to be honest, because I think if you look at maybe the more sort of southwest patch, there are also lenders that are based there, have been based there for a while, have built that sort of reputation with maybe more local brokers in the area. However, we don't struggle in those areas because we've been lending there for longer. So time is the key, and problem with that, I suppose, is time, patience and sales don't always go hand in hand. We're a fairly impatient bunch. We want to get going as quickly as possible, but I think we've seen that growth already. If we see a continued growth over the next couple of years, then I think we'll hopefully break into that Manchester mafia.
Yeah, and I think that might get the dynamic there is going to change, isn't it? Because you've got Mark Goldberg leaving Together, and he's obviously been such a huge mainstay of Together's operations for many years. I mean, how do you think that's going to, without necessarily knowing that the dynamics brilliantly, but what have you been told, or what are people saying to you about how that's going to shake things up as far as the those lenders are concerned.
Yeah, I think it opens an opportunity for us and a number of other lenders, to be honest with you. What will come there, who knows? I'm not going to get my crystal ball out, but I think I think the one thing we will see this year, to be honest, is a lot of changes across multiple lenders, to be honest with you. I think the sort of gossip column will be running rife over the next couple of months, and I think, as I say, that gives opportunities to others. I mean, Together have done incredibly well over the years in that area, and absolutely, I think we'd like to break into there a little bit more. I think we're different in a way, so I think actually it's healthy competition. I think that's definitely an opportunity for us. We felt it a little bit as part of the recruitment last year. Actually, it felt like a lot of people were kind of holding station, seeing what the end of the year would, and certainly in the sort of October, November, everyone was waiting for the budget, see what impact that had on lenders, the market, and now I think we're starting to see everyone's sort of gone away for Christmas, come back refreshed, and then making moves, making changes, positive and negative ones. So I think we now continue to see that movement. I mean, I feel for brokers, there's a new entrant to the market almost every day at the moment, trying to keep up with those. And I think that again comes back to the trust, the relationship you build with brokers. That's really what they're after. And we've already done that over 10 years now. I think that's really key, that yes, there will be new people coming out with weird and wonderful products and an appetite. However, I think when I speak to brokers about new entrants, they think, it's a trust element, really. Do you want to risk that? Why change a good thing if you've already got something set up with a lender, it's working well? Because it's not just about the product, it's not about the appetite or criteria, it's actually just about the process, knowing what happens when. And I think certainly in our space, it's different lender to lender. So that's again something that I think is quite important for brokers, just reliability. Yeah,
I think that's increasingly the case. I've talked about it before. It's just about virtuous cycles, isn't it? And I think that if you were to rewind maybe 2 years ago, we were sort of approaching the nadir of a sort of a negative feedback loop, where you'd let a broker down, that you then meant you ended up getting worse quality deals, having to fight harder to get any deals, as it were. Those loans didn't perform very well. On the credit side, funders get upset. The funding that's available to you is more restrictive, or you don't get as much flexibility, and so on and so forth. And I think we're actually now on the other side of that, aren't we, as a business, where we're performing for brokers. We get more deal flow, better quality deal flow. Funders give us more flexibility, more range, more ability to do what we want to do. And we're able to perform more and the loans perform better. We're able to perform more for brokers, and so we get and that positive feedback loop continues. It's just it's absolutely essential. This episode was sponsored by Avamore Capital. In property finance, you want specialists who understand development, refurbishment, part completed projects, and bridging deals inside out. Avamore Capital knows construction timelines, cost pressures, and what it takes to structure deals through market changes. Deep expertise, not surface knowledge. Solutions-led thinking based on what actually happens on site. When you're working with Avamore, you're working with people who get it. Learn more at avamorecapital.com. We talk about let's talk about some big, hairy, scary goals. So new financial year starting in April. What's the target?
Target for Avamore, so in that next 12 months would be sort of 250 million plus, which I think is achievable. I think that's achievable without adding a whole new product. I'm not going to sit here and say, right, we're going to come out into regulated lending or anything. No. I think actually what Avamore does and does really well, the refurbishments, conversions, development, part complete and bridging, I think we can achieve success still within those four products. We're obviously continuing to grow our appetite and discussions with funding lines, but actually I don't think any of those things need to happen for us to achieve that 250 million. If we look at the run rate alone in H2 last year, actually that doesn't put us far off that, to be honest with you. So actually we're talking really small percentage increases across the board, and actually I think we can do that. So we've kind of laid the groundwork now. I think the last 12 months work in terms of start with the tech, implementing that, using it, tweaking it a little bit. I think it now works really, really well. I think that feeds into our ability to do those smaller loans, because whereas in the past we maybe were a little bit inefficient in certain areas, adding that efficiency means that the cost to us as a business of working on these loans, I think, is far better. So again, it's that, I think I mentioned right at the start of this, the hockey stick effect, really. I think that's that first bit we've done that. We've put that in place last year. We've then seen the upward trend in H2. I think that can continue. I think that's obviously on us now, but there is no excuses now. The process, the platform is all in place now. It's on us as individuals across the business, not just the sales team, but the T&S team who structure the deals, who are then handing over to the underwriting team, and then right the way through to the asset management, the work the guys in asset management have done over the last 6-12 months on the current loans, but also the way they work with our current clients, our current brokers throughout the lifetime of the loan, means that actually hopefully we'll work with these clients more. And looking at our business a bit more as a life cycle than a linear line.
Agreed. Yeah, I think that's I think that is all makes sense and very much rings true as far as I'm concerned. You know, if you think about just like, and the thing about the changes on the tech side, it's every week we're working on some new feature to make the process more predictable. You know, I mean, I think that's probably my number one mantra, and then the efficiency comes with that. But you know, talk about efficiency. We made a big change when we automated the credit papers. So again, you've got underwriters having to spend 4 hours less per deal on writing a credit paper now. Yeah, you can justify that manual credit paper writing for a £5 million or a £6 million deal, but not for a 500k deal, right? So, and I think also I think there's with a more mature, more experienced underwriting team that's more settled, you know, they're more likely to, you know, they're going to be focused on the things that matter and spending less time on the things that aren't as important, which means that, again, you're going to end up with fewer random outcomes, fewer strange decisions, and less drama. You know, like, I mean, that's the one thing that clients and brokers must absolutely hate is, you know, that sort of Columbo style, just one more question, or can we look at this, or can we do that, or the day of completion asking for, you know, a rights of light report for a bungalow development or something crazy like that, which I might add didn't happen but nearly happened one time. You know, it's like these little things that you know, that as a board, as a leadership group as well, you guys are very much on top of, and you're striving to really, you know, make client experiences and outcomes the best that they can be. Yeah,
absolutely. Look, by all means, we're not perfect. We're still working on that, but I think we generally factor in any and all feedback that we have. We're constantly tweaking things. We made a very slight tweak to the process based on some feedback we had from a couple of brokers recently as well. So we're still learning. We're still keen to improve. But I think, you know, we talked to quite a bit already about the tech side of things. I think it's there to, I think the term we've been calling it sort of enable rather than replace. I think that's really key. You mentioned there's some really good examples of, you know, pre-writing 80% of a credit paper, so that actually these really experienced individuals that we have as part of the business are actually focusing on solutions, ways to progress it. What's the next step? Right, this is where we are. How do we get it to the next step? How do we get it to completion? I think that's the power of the tech that's come in, really. And I think the ability to have done that ourselves rather than buy an off-the-shelf package, I think means that it's really bespoke to our process, to what we want to give our clients. I think that's vital, and that adds to, I'm sure, the continued tweaks we'll make to it as we progress, as we launch it in the coming weeks to the actual customer broker market, and they can actually start using it and feeling the benefits of it. I think, again, that feedback loop's really, really important there.
I mean, we know we know off camera that from our discussions, our experiences, that a lot of brokers have a distinct allergy to working with lender portals. How do you think we can successfully overcome that challenge?
Yeah, I think, look, again, no different to the sales team as it is for the credit side of the business, is that it's not there to replace my team. You know, that actually a lot of the deals we still see, we need to have a discussion on it. So again, the platform, the portal, is not there to replace your relationship manager who's on the road or any of the credit team internally, but it's there to add efficiency from a broker side of things. I think from an initial inquiry portal, you may just be sitting there with the client. You may just want to get a quick feel of what the numbers look like and the viability of the scheme, give them something back. I think I mentioned before, £500 million worth of inquiries in January alone. If I look at actually maybe not the first 12, 18 months in that height of new COVID, but actually for the last 4, nearly 5 years I've worked it, inquiry levels have never really dipped. No. It's been the viability of the schemes, or actually clients want to push ahead. I think you mentioned earlier about, people having a little look, seeing maybe they've seen others doing it, or they've watched. I often use the Grand Designs. Sat at home, watched that, and thought, I'll get into property development, but they're not actually looking to transact. So I think again, this platform will enable brokers to give them that quick snapshot, send the client something. This is what they can do, and if that then progresses, then again, it's same as it adds to us. It's adding to the broker's efficiency, because actually sometimes their part in the process with clients can be a little bit inefficient for their own time as well, that they do a lot of back and forth with us as a lender and the client before the scheme's really gone ahead, to be honest with you. So trying to help them be as efficient with their time. I think there's further iterations of that will add even further sort of reviews. We've got a lot of platforms within the background of the wider platform itself, which actually I think eventually we can get out there to the brokers to give them a quick snapshot of, is the scheme viable or not? Actually utilising the tech that we've built internally that is making us far more efficient and actually giving us a far better conversion, actually giving that to brokers in the future as well. Along with just, kind of a live update dashboard for the clients, for brokers as their deals progress as well. I think that's really important, because sometimes one call can turn into 6 or 7 calls back and forth, and actually just a really quick note to say, this has happened on your deal. Email prompt to say this has happened, contact details of who's dealing with it, just little things like that actually it might just save 2 or 3 calls. That means that our clients, our brokers, can focus on the next deal as well. So for me, a lot of it is efficiency for brokers, as it is for us, to be honest with you. But as I say, as we progress this is still for me version 1. When we go launch live in the market, there'll be further add-ons and improvements we can make to it. So I think it's an exciting time. And generally, maybe I'm biased, I work for Avamore, but I mean, you can use it. It is very, very easy to use, but it's, as I say, it's not a replacement. It will never replace my team, the sales team here. It's to add on if they're out on the road and you need something there and then. It's quick, it's efficient. You can create terms in, I think, definitely sub 5 minutes. I think my team now down to about 2-3 minutes using it.
We've just completed, and at the time of recording, I think you're about to launch the new DIP calculator with your brokers. I think Davina's doing an outreach, and I think there's even a suggestion that we're going to have a competition for a monthly competition for brokers who can submit the fastest DIP. Yeah, and I think we're going to be looking at times under 90 seconds, actually.
100%. And you mentioned calculators. I think actually feedback I have, brokers actually really, really enjoy calculators, good ones. Maybe it's not so much the bad ones. I think there's certainly a lender out there who's had one for a long time that I think brokers really, really like to see. Yeah. We had a lot of feedback when we used to have one, actually. The brokers really liked it. I think where the platform goes a step above is that's kind of a one-time use. Yeah. Quick numbers, can create something and then done. What our platform enables you to do is exactly that, but then go back into the case and amend. The amount of times I've created terms for a client, send them over at 12 months, then the broker comes back and says, actually, can I have it on 18 months? Or actually, can I see what it looks like with this? Or can I see what like that? You can create multiple iterations of the same deal. You can save them all as additional. You can change it. So I think that's the above and beyond of what our platform enables us to do for that sort of calculator stage of it as well.
Well, I think the other thing though is that if you're a broker and you're able to go log into our platform quickly and easily as you can now. Go plug, you're sat in front of a client. It's mobile optimized as well. So we designed this DIP calculator. So although it's through your browser in your phone, it's mobile phone optimized. So you can be sat with the client, plug the numbers in 90 seconds, and then you can even download a set of indicative terms there and then. Say, right, here you go. This is what I can get you, and and then you're not having to wait half a day for your relationship manager to come back to you with your DIP. You've got it there and then, and that might be the difference. If it's a newish client for a broker, it might be the difference between winning and losing that client. So I think it's actually from a broker's perspective, it's going to be quite quite transformational.
100%. I think it's no different for brokers than it is for us, really. Indicative terms, quotes they're more of a relationship building tool than they are a transactional tool, I think. And that's no different for brokers. If they're at that stage where they probably haven't got all the information ready to submit the full case for credit review, they need something to win the client, to build that relationship, that trust as well. It's no different for them than it is for us. So having that real-time ability to do it, as we said, in 90 seconds, then actually that will make them stand out. The number of schemes I've seen over the last 18 months, 2 years, that I see the same scheme, same borrower from multiple brokers. Actually, this gives them that little step up, hopefully, that they can be the first one going back to the client, which then shows their efficiency. I think there's loads of benefits there as well.
I really like the point you made about being able to demonstrate the progress of cases to brokers and by extension borrowers. Actually, I think we probably need to look at making that data available to borrowers as well directly. I know some brokers will be sensitive about that, and we obviously have to respect that. But because in my mind, I think one of the things that, obviously there's not a huge amount. It feels anecdotal. It's sort of on vibes, but to me it feels like a lot of the time clients often slow transactions down because they feel like the lending process is a grind, or like maybe the legal due diligence is a grind. And so then they sort of feel like, oh God, this is going to take forever, and then they don't engage with the process as enthusiastically, as a consequence of that. And a deal that could happen in 6 weeks ends up taking 6 months because the client's just like, right, and just starts to drip feed stuff through. So I think one of the things that we've already got a deal summarizer for our own internal purposes around how legals are progressing and where the stage is at and who's got to do what next and whatnot. I think actually one of the things we'll probably be looking at for the next fortnight, I know you're going to be sat in today's UI sprint review, which Greg's going to lead. I'm not going to be there. I think that's one of the things we'll be able to look at is maybe can we filter that deal summary so that it's a bit more broker and client friendly, and to give that bit of transparency. I mean, do you agree with that with that statement though, that actually that that deals have a better chance of progressing more effectively and with less friction if people know where the deal's at and who needs to do what?
The exact word was going through my head as you were saying, that was transparency. I think that's the key thing there, is that in itself changes. I think those you mentioned there were clients who maybe think that the process is going to be a bit of a slog, going to be quite difficult. That naturally almost creates this us versus them, whereas actually the best deals that in my experience that go ahead is where you all work in collaboration together, client, broker, lender together, where if an issue arises that you'll get together and go, right, how do we solve this? And the way you best do that is we're transparent with everything that we do. We don't feel like we try and hide anything, or we're kind of building some time for us that actually it's all live. I think that's the really key thing with the dashboard, is that the moment the value lands, broker client will know, so that actually we're holding ourselves to account to already high standards in terms of turnaround times. I often say to people that the term I remember when I was a broker, or maybe when I worked in sort of challenger bank space, was SLAs. We don't really have them. The moment something comes in, it's dealt with, and I think we're being clear and honest about when those things land, so that they know, right, the clock ticks. I saw that the valuation report landed today. I know I'm going to get a decision back. So I think that's the way you build collaboration, is transparency and trust. Yeah,
I think there's more transparency, more communication, not less. Is always a valuable thing. In terms, if you look at your experience over the last, I suppose the 6 years that you've been with the firm nearly, what do you think are the things that make a deal progress well, and what are the things that what are the ingredients that make a deal progress well, and what do you think of by contrast, what do you think of the ingredients that make a deal be painful?
The easiest one I'd say is a deadline, to be honest with you. Those deals that have a deadline to complete, a target completion date, I think you're all working towards the same goal. I think where that sort of falls in the as soon as possible, or there is no deadline. I think there's so many different people involved in one transaction. There's us as the lender, the broker, the client. You also then have the solicitors, the surveyor, the QS. We should all be working to the same deadline, right? So deals that have deadlines or a motivated borrower because of those, I think are really, really important. Again, for me, the collaboration between all 3-4 parties, I think is again vital. We've seen that over the last few years. Come back to, brokers sort of and clients are more maybe progressing things slowly. I think in previous years maybe because they were hoping that rates might start come to that wait and see sort of mentality a little bit. I think they realised that we kind of are where we are now with that. I think we might see a couple of little drops, but I think it's going to probably level out in terms of the base rate, and invariably that has a wider impact on general cost of funds across the market, to be honest with you. So I think we've got past that wait and see now, and that helps. So for me, motivated borrower, deadlines and collaboration between all parties, that's what gets things done.
What do you think about brokers hiding clients from lenders? Is this sort of post acceptance of terms, when you're in the VAL and the MS are paid for? I mean, where do you stand on that, and how do you and do you think that is helpful or hinders deals, or kind of are you neutral on it?
I think it can go both ways, because I think, sometimes you are just adding a further chain in communication, and some deals actually, they progress really well where actually the underwriter's got the deal and they're speaking directly to the borrower. I think that generally can work quite well. But I also think there are a lot of brokers out there who can add real value in that space. So I think there's a mixture. I think it's a case-by-case basis. It's, brokers' experience and actually probably clients' experience, because we mentioned before about the types of developers who naturally work on core Avamore development loans, that sort of 1 to 9 units. Actually, they're great builders, but sometimes they're maybe not always the best with their paperwork or their admin side of things. So
this is true.
Having someone on their side who can actually help with that and progress and give advice, I think it can be important. For me, I think it's, we are still predominantly a broker-led business, so making sure that we look after our primary customer, I think, is the most important thing. But the ideal scenario is we'll get on a call together, and actually we'll work again in collaboration together rather than that sort of ownership. I can understand why certain brokers will do it. There's a lot of lenders I mentioned there. We're probably broker-led. We're probably 90% of our business is broker introduced business. So, but there are a lot of lenders out there who are not, who are actually trying to push more developer direct, or already have a really good mix between direct business and broker led business. And there is obviously a risk to a broker, right? That they submit a deal and then that lender goes after them directly. I think the one thing I'd say here is you can have confidence in Avamore. That's not our business model, to be fair. I think as new deals, invariably, if we do a good job with them throughout the process and more importantly at the asset management stage, drawdown stage, then yes, that client probably wants to come back to Avamore, but we keep the broker looped in, we keep them involved in that future transaction. As I say, the broker is our ultimate client as well, really. You occasionally get a unique scenario here or two, which puts us in a lose-lose situation.
I can think of one from the back end of last year.
Yes, I think it's a difficult position, because as I say, they're both our clients. For me, I've built my career on broker-led business, so I'm probably a little bit biased on that I'd far rather do that. And I think also the broker market is vital for us as a business of our size, that actually they are, being purely selfish, they are that network that enables us to have far more outreach across the country. We talked about before our willingness and actually our experience now of lending across the whole of the UK or across mainland England wouldn't have been possible without our broker network. So I think, there's a few challenges with that conversation, but generally I think we handle it as well as possibly could be expected. So as I say, I think brokers should know, if they don't want to be involved in the transaction, they can leave us to the client, because we're not in it to nick your client. Yeah,
and I completely agree with everything you said, because I think we've seen examples of where the client probably shouldn't have been talking. The client speaking to us directly created more problems than it solved, because they told us things that if a broker had been involved, we wouldn't have heard, and that didn't, and it's a bit like what we just released the interview I did with Shaz, where's Shaz, Shazad Ahmed, and he was saying that basically, in many ways as a broker, you want to tell the lender as little as possible, because everything that you tell, every piece of information, every document you put in front of an underwriter, the underwriter is, I think something, again, we're trying to work on with our underwriting team, which is like just look at the stuff that's necessary. Don't, because it's a bit like otherwise. If you give a lender too much information that isn't necessarily pertinent, that can lead to, they start to pull on threads that aren't necessarily necessary or beneficial to the transaction. And certainly, a client saying certain things or the thing that the expression that clients often say to a non-regulated lender that they think would be helpful for the case and support the case is an absolute deal killer. Is, well, if it doesn't sell, I'll just live in it. It's about the worst thing that you can hear as an unregulated lender. So you go like, no, I really didn't want to hear that. Thank you very much.
Yeah.
You just made that case so much harder.
Yeah. No, I agree. I think they are. They know the industry, and also it's their reputation with the lender probably more so than the clients, the brokers, that actually they want to work with that lender again, and therefore they are going to disclose everything that needs to be disclosed. But I agree to your point that actually sometimes too much can be. But I think that's on the lender primarily to set a really strict structure to that underwriting team, that this is what you need to look at. These are the red threads you don't need to pull on. And actually, if we're really clear in what we ask of our underwriters, and more importantly, what documentation we need from our clients, then actually you shouldn't have this sort of, I think those points you mentioned come from uncertainty of what they need and what they don't need. Actually, if we're really clear in what we need and what we don't, then actually you shouldn't have those issues arise.
I mean, now you're on the board. How do you juggle the I suppose the slightly competing interests of your department versus the needs of the wider business? Obviously, we had a bit of an example last week, which obviously we can't discuss. Where around a redemption and the impact of the impact on sales there versus the impact on the wider business. How do you juggle that?
Yeah, I think I guess for me, I've always been able to probably see the bigger picture a bit better. I mentioned before, sales can be a little bit of an impatient, short-sighted view. I think that's probably why maybe part of the reason why I've progressed is that I have been able to see the bigger picture, that Avamore never making a capital loss on a loan. Actually, that means that me as a salesperson, my team will do more deals for years to come. So actually, they're really important that actually we maintain a good credit acumen process on deals, that we lend on deals that we want to do, that are good schemes, that fit our parameters. I think you touched on before around our relationship with our funding lines. We've always worked inside the parameters that we've been given. So that gives us the confidence to know if we like the deal, our credit committee like the deal. Yeah, it's essentially funded. I think that's really important. So the bigger picture of, okay, there might be one or two deals where, maybe we've had to pull things in or change something, but that means that actually it's probably the right position to be in, and actually means that our reputation, if we wanted to grow funding lines, or our ability to lend and continue to grow as a business, is there because of that. So I think it's a trade-off between making sure that we lean in where possible and we do the best by our customers and brokers, but also that we maintain a really strong loan book. That's just going to give us longevity. And we've seen that, right? It's no mean feat making 10 years as a lender in this market, to be honest with you. So,
yeah, I mean, to that point, we've seen, how do you view it when we've seen new entrants come into our space, burn really hot for 18, 24 months, and then and then to not be seen again. We've seen it time and time again. How do you maintain your cool and your focus to not overreact to that? And more pertinently, how do you coach your team, the RMs, to not be despondent when they're losing out to those kind of quote unquote hot lenders?
Yeah, I mean, I've seen probably a handful at least in the 6 years I've been here already, and it's frustrating, right? Because they'll come out in a sector that you lend, and all of a sudden you do see a dip off, maybe with a period of time or with a collection of relationships, brokers and things. I've definitely seen that, and it is frustrating because it does eat in, and you almost, once you've seen it a couple of times, what's happening, right? It won't be around forever. So again, probably comes back to a bit of patience. I think, what advice do I give my team is again that, if you set a precedent with a relationship, whether it be a broker or a client directly, that is the framework of which your relationship moves forward on. So if you're constantly leaning outside of your core appetite, changing the structure of how you do things, or even potentially the pricing, that's then expected moving forward, and that's great. That's our job, to try and push boundaries, push credit as much as we possibly can in sales, but also set a standard that we can maintain with our relationships. I think our I mentioned it before, when you go out and see a client, a broker for the first time, that first deal is probably not core deal that you want to do. And actually, if you set the precedent and go, well, we could try and square peg round hole that deal in, that's the type of deal, type of process, type of flexibility they expect from you. And I think it's really, really important that we set a precedent that this is what we're really good at, because there are so many areas we are really strong, really unique, and can offer brokers and clients an experience that no one else can match. I think it's important that we stick to that. Yeah. That's the key.
It's a bit like going on a crash diet, isn't it? Yeah, you'll lose a few pounds, but then you'll put it straight back on when you go back to you go back to your usual lifestyle. So I think you've got to find, you're better off finding a diet that's that you can sustain.
100%. Look, I think it's far easier said than done, and I can say I've definitely been at fault in years gone by where you might see a potential relationship or a key account and you sort of think, right, we need to do different things here and there. But if you can't sustain that relationship in that format, then as you say, it's short-term gain for long-term pain.
Well, I think it's not just you, right? I think it goes the same for me as well. I've probably been at times the worst for leaning in and trying to sort of, do that sort of square peg round hole dance. And and look, yes, you might get away with it from every now and again, but unfortunately, you do get caught out, and that can be harmful for relationships. And again, it's like, when we go back to trust and performance, and it's far better that people know what you stand for and what you're good at. If we think about so many of the challenger banks that operate, they say in our space, but it's certainly adjacent or close to where we operate. Obviously, their credit criteria and the leverage that they offer is a lot of the time is not comparable with what, say, we can offer or others can offer. But yet they do enormous volumes, and I guess it's a function ultimately of, like, look, the people that they work with, they know what you see is what you get. There's no pretense. If you fit these criteria, you will get the money. Okay, it might take a while, and the process might be painful, but it will happen. And I think ultimately that for me is like that realization that, look, as long as people have clarity on what you're going to offer and what you're going to deliver, you will be all right if you start to perform for people consistently. Word gets around, right?
100%. I think that comes back to that certainty of funds and trust that we talked about at the start. Really, that there will be brokers out there who haven't used us yet, and I hope that we'll change that in the coming months and years. But if you haven't, then it is a risk. I think that's a bigger challenge for any lender that probably doesn't have the word bank at the end of their name. That actually, if you're on the high street or you're a challenger bank space, that naturally feels confidence, maybe more so with the client, less so than the broker, and therefore the broker's job is a little bit easier to sell a name that the client's aware of. I think that's definitely a really important thing. That's why we always do a post-credit call with the borrower and the broker before the client spent a penny. Introduce who we are. Show our experience, our knowledge, give them confidence in not just the brand, but actually the individuals, getting one of the committee members on that call, getting the underwriter on that call. These are the people that are going to be working. They're not an email signature. They're not a number. And the flip side of that is the same for us, getting to know the client. That's the great thing, and why I think brokers, clients like using lenders like ourselves, is that you are not reference 147561. You are an individual to us. We know how you work, and that's how generally those relationships that I've worked on for the 6 years I've been here, and some brokers I've worked with for even longer across multiple businesses, it is knowing how each other works, and that goes both ways, because brokers will work in different ways, lenders work in different ways, clients work in different ways. If you can build a successful collaboration between the three of you, then the next deal's easier. And actually that's an important part of our growth, I think, is repeat business. We've got the team size now across my team and actually on the asset management team as well. I think the work that those guys are doing in terms of helping the clients throughout still a fairly challenging market to develop in, that's going to help us work with those clients more moving forward. So I think that's again for me and for our brokers and for our clients, actually, that's really important. For those that are newer to development, you hit completion on a term loan or a bridge, it's like, right, okay, well, I'll diarise to reach out in 9 to 12 months' time when they need to exit or redeem or refix their rate. Actually, the work just starts on completion in development, and actually having that access to the dedicated asset manager, making sure the broker's being kept up to date where the client is. That's again part of the platform, these sort of live updates and drawdowns and things like that we can offer in the future as well. I think there's so much to be had around the relationship post-completion, between completion and redemption as well.
Yeah, and actually on the tech side, the one area of the business where, it probably could be accused of being a red-headed stepchild, or can make that they feel like the red-headed stepchild is the asset management or the loan management team, where they've obviously had the first bit of tech actually built for them in our central loan management platform, but we haven't added all the bells and whistles that the sort of, I suppose, the pre-completion side of the business has benefited from. So there's going to be some big improvements that we can expect over the next 3 or 4 months in that space. I know Jacob's spearheading that, and I'll be helping him as far as the UI is concerned on that. And I think that the experiences, the clients' experiences are going to be better. Brokers will continue to have that transparency and understanding of what's going on post completion, so that they can maintain that aftercare. And I think also, as importantly, is our funders as well. Our funders having real time information to help them first of all have comfort and confidence that the loan's performing as it should do. I think is also going to be really beneficial too. So. And also, like, sometimes it's just that having that early warning system where you can say to a client, look, rather than letting a problem fester for 3 or 4 months and then finding that you have fewer options to help them restructure the loan to kind of get it to completion, and then sometimes you have to take more drastic action to get ahead of those issues earlier, means that client outcomes are going to be better. Brokers are going to, and ultimately the broker outcomes are going to be better as well, right? So I think these are really big things.
That's I think the really important part of it actually for me is that sometimes through no fault of the broker's side, that actually you hit completion, and then actually that's why the client maybe goes back to the lender directly, is that because they haven't had this opportunity or need to communicate with the broker. Actually, if we can help them stay involved and not, take up too much of their time, if we can add that to them, then again, that builds further trust that actually, okay, I saw on the podcast he said that they didn't want to cut me out, but actually I've seen it in practice. There's definitely numerous brokers out there where, we've even just done an extension on a loan, fully refinanced ourselves out, and essentially it's a call into the broker, can you please send me an invoice for X amount? We're going to pay you on the new refinance. So that's really important, the way we work, I think, especially with the brokers in that post-completion pre-redemption space, because it might mean that maybe that client doesn't come back round to Avamore, but the broker does. I think that's a real opportunity for us to get them more involved and keep them on side. And as I say, that again adds to the collaboration for future loans.
Yeah, no, totally. And it's just in terms of with the growth of the team, how many more bodies do you have in your mind to join or add to the team on top of the sort of 6 that you've got now?
Yeah, I think at the moment for the next 3 to 6 months we're okay. It would be see how the new starters have bedded in and what capacity they've got. But I think realistically, look, I think in the next 12, 18, 24 months, I could see that 6 becoming 10 quite easily, to be honest with you. I think end of this year, I think we'll add a couple more. And I think what we're trying to create again is a bit of a production line. Again, you mentioned there about the backgrounds at the start of the podcast was, we don't always, our natural mindset is not to just go out and get ready-made experience. I think we've got some of that in the team. We've got some who are, in a similar sector, maybe different lending, or have come from the broker side. So creating almost a bit of a production line that, we can get people in a little bit more junior than others, maybe train them up in the Avamore way. Which I've often found is where we've had most success. If I think of even previous sales teams, they've all come into that internal role for 6, 12, 18 months. They know the Avamore way. Whereas I think sometimes actually the team I kind of took over was probably the most experienced on paper, but actually all very used to doing it in a very different way to Avamore. So I think that builds loyalty with my team, with our brokers, and hopefully creates longevity, because the most frustrating thing for brokers, right, is every 3 to 6 months they've got a new BDM, new arm reaching out. They're never building a relationship. Actually, we talk a lot about trust and certainty and funding as a business, but actually, who do they really have that with? Is that person that's out there sitting in front of them telling them we can or can't do this. The longer they work with the same person, the better trust and relationship. Because again, I think it all comes back to, you want to work with people you like working with as well as those that you trust as well, to be honest with you. So I think that longevity of our team hopefully will really, really important.
I think longevity is really important. Having had Mark Posniak on the podcast, that episode, by the time this episode releases, that'll have gone out. But with Mark Posniak talking about the success he's had in 5 businesses now in the specialist sector. And the thing that really stood out to me was the consistency of he seemed to have the same trusted individuals who followed him to all of those businesses, and it's that consistency of team. You have that kind of collective trust, and I think that makes all the difference. But in terms of sort of the RM team getting out there, one of the things that we've talked about privately is the difficulty sometimes that they have to go and book appointments and go out and see people, and I think that particularly, it is an opportunity to sort of get on the backs of Gen Zs again, not wanting to go out and see people and talk to people. But I don't think that's not the case with our team. Everyone's very outgoing and gregarious. But what are the challenges that relationship managers face? And I guess this doesn't just go for our team, but also other lenders. What are the challenges that RMs face in getting out and seeing brokers, and how do what is your advice to them to get in the door and to get the opportunity to go and see people and spread the gospel according to St. George?
Yeah, I think probably threefold the challenges. I think first is capacity. I think we call our BDMs, our sales team, relationship managers versus maybe the more traditional bridging term loan BDM role. Yeah. I've often looked at those titles maybe a bit, I shouldn't look at it this way, but an RM's role traditionally in the development space is a bit more cradle to grave. You're sometimes more involvement in credit papers, and actually it's a little bit, maybe not quite to that extreme how we used to do it, but it was a bit more of a get out and do a bit of origination as well as hand-holding the deals throughout the process. Now, again, to touch on the process improvements we made last year, we've given the sales team the platform in the office to just get out there. So there is no excuses there now. I think that we've got the process, and more importantly, trust with the individuals, because there's no different with the brokers needing to trust us as a lender. My team, when they're out the road, need to trust the operational team, the credit team in the office, to know that, right, I can take my hands off today and go out and see people. So I think that's the first challenge, is having the capacity to do it. I think focusing on the importance of it. I think it's very easy as a salesperson to fall into a bit of a spiky routine that when you first start the job, you haven't got a pipeline, you haven't got a single deal. So all you do is you focus on the front end of the funnel. You go out and see a load of people, you build a pipeline, and then invariably what happens, the pipeline takes over your life. That you're managing the pipeline rather than the deal, and being strict with yourself in saying that's not my job. I've got a team internally, whether that be internal salespeople, credit functions. We have transaction and structuring team. We have the underwriting team in there. We also have actually the management team who are very heavily involved in the deal flow. If you look at Greg's involvement throughout most deals there, they've got the team internally now to give them that trust. All they need to do is focus. We often talk about it, filling the funnel. Yeah. So I think that's the key thing. It's not easy, right? But I think the salesperson's life is to try and keep it as consistent as possible, rather than this. One quarter, it's all about filling the funnel. The next quarter, I'm emptying the funnel. Then I'm filling it again, and I'm emptying it. I think try to make sure that you're consistent throughout. And the only way you do that is you consistently just get back out and see people. Then the final challenge, I guess, is basing it on more than just what your company offers. I think some sort of feedback I've had from previous members of the team they struggle with was they'd go out and see a broker for the first time. They'd tell them all about what Avamore does, the products, and then they'd call that broker back up in 2 weeks, 4 weeks, 6 weeks time and say, I need to come out and see you again. And they go, well, have your products changed? No, nothing, no changes to our products. Well, why do I need to see you then? You need to base it on more than just a product guide. That's not what we offer, right? That's not what Avamore sells. So actually it's about case studies, but more importantly, it's about relationships. Yeah. It's going and hot desking from that office for the day and being, part salesperson, part a roaming underwriter, because actually our team have the credit knowledge, experience to be able to actually assess a deal and sit there and do that, rather than some salespeople out there historically maybe a bit more like a deer in headlights and they're asked an underwriting question. Actually, if you've got that ability, then go work for the day, build a relationship, more social settings and things like that. I would say I think the social side is more difficult now than I remember it years gone by when I first started.
People are a bit too health conscious now, aren't they?
I think everyone's far more health conscious. Work-life balance, I think is, when you had to be in the office, maybe then the opportunity to go down the pub for a couple of hours is quite enticing, or be taken for dinner or lunch and things like that. When it's the difference between that and working from home or seeing the family or friends and things like that, maybe it's a bit different. So I've definitely seen a change in uptake of more social events and things like that. It's certainly not impossible. You've got to get in early. You've got to think of things that are a bit different. My team took a few brokers to the new Guinness factory last week, opened up in Covent Garden. Something a bit different. I think everyone really enjoyed it, but I think you've got to think outside the box a bit more with that stuff. But for me, if you base it solely on what your product, there was definitely an individual in our team in years gone by that was very, very deal hungry, but probably lacked the relationship side of things. And I think if you do that, you're only as good as your products. And let's be honest, there's a lot of great things about Avamore, but I make no bones that we're never going to be out there and just be simply the cheapest.
Or the highest leverage.
There's far more to us than that, to be honest. And that's what you've got to get out there and see, because I think I said it at the start. If you go out once and never go back again to try and expect A, good deal flow, and B, quality deal flow of what you like to do, it's impossible. You need to be seeing people realistically, or at least checking in, at least once a month realistically with those that are going to provide you business, because between you going out and going back out, there's probably 30, 40 lenders have gone out.
Exactly.
And as I say, I don't care how good you think you are at sales, you need to be doing it multiple times.
I suppose sort of, I know we're sort of running out of time now, so we're trying, we're going to have to wind up shortly, but sort of I suppose one of my last questions is speaking of brokers, do you see much evolution of the role of brokers or the broker landscape over the next 5 years? Especially in the world of AI and AI and tech, is that likely to change? Can you see any changes coming, especially someone who's been in the broker space at the beginning of your career? Yeah,
I think we've seen over the last few years, and I think we'll continue to see more coming from the regulated space into the unregulated space. The potential earnings in it are higher. There's an argument to say potentially the work-life balance, having been a regulated broker, and the levels of admin you have to do in that role is challenging. So I think there's quicker wins, if you come into unregulated in the bridging space. So I think we'll continue to see those come into it. They're still very limited in terms of qualifications or barriers to stop people doing it. So it's very easy to come into. I think we've already seen probably 3 or 4 try the tech side of things from a broker perspective, less so from a lender perspective. I still think it can help, but I don't think it replaces, to be honest with you, because I think certainly in development, no different to ourselves as lenders, for brokers, it's not the products that they offer. It's the experience, it's the knowledge, it's the hand-holding, it's the solutions that they drive as much as it is us as a lender, to be honest with you. So I still think there'll always be a massive need for that. I don't see a platform completely replacing the individuals, to be fair, but more, again, a collaboration between platforms and brokers. I think there's some out there that work quite well in terms of, again, giving that broker that quick snapshot. I think that's the benefit of those side of things, but maybe less so in terms of actual replacing them.
Do you think obviously there's one particular technology platform broker that we're talking to in terms of working with their systems? Do you see that becoming more prevalent? More broker firms investing heavily in the tech to streamline that application process and give themselves a bit of an edge in from a technological standpoint? Yeah,
I think broker have done it really well, to be honest with you, because I think they've realised what do both brokers and lenders need, rather than necessarily what they want to set it up as. And I think it's a really important part that it gives brokers access to lenders. It highlights them, but it also doesn't want to control the deal. Actually, what does it do? It puts the two in touch, basically. I think they've done really good things with their API of their system as well, both into broker platforms as well as lender platforms as well. So that's something we're working with them on at the moment to link up their platform with ours. And for me, it's an introduction. That's the way to look at that platform and the way tech can help brokers is as an introduction, as a sense check. I think, again, if you're a broker who's maybe, never done a land bridge before, and you just want a quick sense check of who does land bridging, I think that's where they can help feed into maybe gaps in knowledge and things like that, and then make introductions. So I think they've done it really, really well, to be fair. And that would definitely help as the increasing numbers of lenders out there, and trying to, as I said at the start of this podcast, being a broker is a difficult job to keep up to speed with who's lending, who's not, the new players, those that have left. And again, these sort of platforms can help just make them a bit more efficient early doors.
Yeah, fair. I suppose closing tradition, Adam, be a shame not to ask you the question I ask everyone else. If you were to look back, and you can pick any time in your career, it could be the dark days of April 2020 when you when you nervously joined Avamore, or it could be any time before that, or after. If you were to give your younger self some advice, what would it be and why?
Cool. The easiest one, I think, as I touched on with brokers, going from regulated to unregulated, would be getting the unregulated space earlier, to be fair. I spent a good 7 or 8 years in that sort of regulated space before I moved over, to be honest with you. That was definitely a move that I really appreciated and actually felt more natural, to be fair. The other thing I'm trying to give maybe my younger team members is patience. I think actually, as I say, that we talk about the darker days of April 2020, actually, for me, I always say to people, I look back now on that time, really, really fondly, to be honest with you, because I joined, the market wasn't there, and I'll be honest, I was panicking a bit. As a salesperson, you join a new business, you want to hit the ground running, show your new employers, your new colleagues what you're made of and what you can do. And it was challenging, but actually that first 3 to 6 months where there wasn't a lot of business out there to be done for, not just for Avamore, for anyone really, it gave me a real chance to really focus on building relationships, maybe not so much getting out and seeing people on Teams and Zoom and things like that, but building relationships there, because coming from a different sector, I wasn't in development before I joined Avamore. There's a lot of different contacts out there I needed to make, and also again, like I'm doing with my team now, grow my own knowledge on what Avamore do and don't do. So patience. So it's easier said than done, but I think, as I say, that time was vital for me and where I am today, to be honest. And
I think ironically we saw the benefit of that in 2021 when you had an absolute stellar year in terms of sales performance. So and led to your promotion to head of sales. So I think all of that fit rings true, and I think and it's certainly something I think you instill in your sales team now. So that's great. Okay, well, I think that's about all we've got time for. So thanks again, Adam, for coming in and sharing your thoughts and your experiences, and hopefully to our audience it's not been too salesy, so
not too Avamore heavy,
not too well. Maybe a bit of that, but I think all in the right context and the right spirit. So I've been appreciating that. If people want to reach out to you, what's the best way for someone to get in touch and continue the conversation?
Please reach out on LinkedIn, either mobile or email address, to be fair. So hopefully going to have plenty of time to help my guys grow and always want to, I think that's one thing in sales, doesn't matter whether you manage or you're in a relationship manager, you still want to be speaking deals. So happy to help where I can. Brilliant. Well, I've been Michael Dean. You can find me on the internet at property_funder. Thanks to Matt for his help today on the technical side. Thanks to Davina and Versta on the production side, and we'll talk to you again on the next one. Thanks and bye-bye.